You're looking at the wrong thing. Price going up does not mean a trend is strong. It's the number one reason traders get crushed. There is only one price action metric that matters. I use a simple meter to score it from 0 to 9. And I'm showing you how to use this meter right now. Most traders think price action trend analysis is complicated, but it comes down to just 3 pillars: structure, momentum, and exhaustion. We're going to check 3 things for each. 9 checks total. 7 or more points, the trend is strong. Less than 7, you stay out. Let's start with pillar 1, structure. Structure is the foundation. Think of it as the bones holding everything together. You're checking 3 things here. Each one is a simple yes or no question. The first check is the staircase test. Pull up any chart and look at the overall shape. Does it look clean and organized, or messy and chaotic? A strong uptrend, in pure price action terms, builds like a staircase. Each step is higher than the one before it. The highs climb higher. The lows climb higher too. That's what real strength looks like. Now compare that to a choppy, jagged mess. Price is going up and down with no clear pattern. That's not a trend. That's confusion. The market is fighting with itself. For downtrends, you flip the logic. You want a clean staircase going down. Each high should be lower than the last. Each low should be lower too. If the structure looks clean and organized, score 1 point. If it looks messy and chaotic, score 0. This check alone eliminates most bad trades. The second check is the danger line. When price pulls back inside a trend, you need to see how deep that pullback goes. Here's how you measure it. Take the most recent major low and connect it to the most recent high. Now split that entire move exactly in half. That halfway point is your danger line. It's the line that separates strength from weakness. In a healthy uptrend, pullbacks should bounce before they reach that line. They stay above it. The trend is protecting itself. But when a pullback slices clean through that danger line and keeps dropping, the trend is wounded. It's losing power. For downtrends, the logic inverts. Rallies must stay below the danger line. If a rally breaks above it and keeps climbing, that's a massive warning sign. Buyers are fighting back hard. If your pullbacks respect the line and stay shallow, score 1 point. If they break through and go deep, score 0. This tells you if the trend still has defensive strength or if it's bleeding out. The third check is the break. This is the most important one. It's the ultimate truth teller. Has the staircase pattern broken yet? In an uptrend, you're watching for a lower high. The moment price tries to rally but fails to exceed the previous high and then drops again, the uptrend is officially dead. The pattern is broken. The structure collapsed. In a downtrend, you're watching for a higher low. If price tries to drop but fails to make a new low and then rallies instead, the downtrend is finished. The selling pressure is gone. If the staircase pattern is still intact with no breaks, score 1 point. If the pattern has broken, score 0 and exit immediately. Don't argue with a broken structure. That's all 3 checks for structure: clean staircase, shallow pullbacks, no break in the pattern. 3 simple questions, 3 potential points. You've just measured the bones of the trend. Now let's move to the engine. Momentum is the engine. It's the raw power pushing the trend forward. Structure tells you if the trend is organized. Momentum tells you if it's actually strong. Again, just 3 checks. The first check is candle bodies. This is classic price action strategy stuff. Ignore the wicks for a moment and watch the bodies. Just look at the bodies of the candles that are pushing in the direction of the trend. In an uptrend, are the green candle bodies big and thick? That's raw buying power. The buyers are in full control. But if those bodies start shrinking and getting smaller and smaller, the engine is losing steam. The buyers are getting weaker. This isn't some abstract idea. It's pure price action, pure trend analysis, and you can see it right here in the candle bodies. I learned this the hard way. I held many trades through shrinking candle bodies because I thought the trend would recover. It didn't. The trend died slowly, and I watched my profit turn into a loss. Now when I see shrinking bodies, I score it as 0 with no exceptions, no second chances. So if the candle bodies in the trend direction are big and strong, score 1 point. If they're shrinking, score 0. The second check is rhythm. Strong trends move with a steady, predictable rhythm. Count how many candles it takes to travel from one high to the next high in an uptrend. A powerful trend makes new highs like clockwork. It's consistent. It's reliable. You can feel the rhythm. But when momentum starts to die, that rhythm breaks down. It starts taking a lot more candles to make the same progress. Then a lot more candles. The trend is slowing to a crawl. It's exhausting itself. So if the rhythm is still steady and consistent, score 1 point. If it's slowing down dramatically and taking longer and longer to make progress, score 0. The engine is running out of fuel. The third check is volume. Volume is the fuel behind the move. Without volume, price moves are fake. They have no institutional backing. In a healthy uptrend, volume should surge on green days and shrink on red days. That's buyers pushing hard when the trend moves up and taking a break when it pulls back. That's what you want to see. But if you see huge volume on red pullback days, that's a different story. That's sellers entering the market aggressively. They're attacking the trend with size. The same logic applies to downtrends. If a green rally inside a downtrend has massive volume, buyers are fighting back hard. The trend is under serious pressure. So if volume is supporting the trend direction, score 1 point. If volume is declining or showing up on the wrong side, score 0. The fuel is gone. That's momentum measured. Big candle bodies, steady rhythm, supporting volume. 3 checks, 3 potential points. Now for the final pillar. Exhaustion is the final pillar. These are the 3 warning lights that flash right before a trend ends. You're looking for signs that the move is running out of energy. The first check is the climax. After a long, extended trend, do you see one single, massive candle on huge volume? That's not strength, that's panic. In an uptrend, it's called the blow-off top. Everyone who wanted to buy just bought in that one candle. In a downtrend, it's called capitulation. Everyone who wanted to sell just sold in that one violent move. The problem is simple. After that climax, there's no one left to push price any further. All the buyers or sellers exhausted themselves in that one candle. The tide turns immediately. So if you don't see a climax candle yet, score 1 point. If you see a massive climax on huge volume, score 0. The second check is divergence. This is where your momentum indicator becomes useful. You can add the MACD or RSI indicator. Pull it up on your chart and compare it to price. Is price making a new high while the indicator is making a lower high? That's bearish divergence. Price looks strong on the surface, but the engine is failing internally. Momentum is dying even though price is still climbing. In a downtrend, you look for the opposite. Price makes a new low, but RSI makes a higher low. That's bullish divergence. The selling pressure is weakening even though price is still dropping. So if there's no divergence visible, score 1 point. If you see clear divergence between price and RSI, score 0. The internal engine is breaking down. The third check is character change. This one is subtle but incredibly powerful. Every trend has a personality. A healthy trend feels smooth, predictable, and easy to read. You can almost sense where it's going next. But when a trend starts to die, its personality changes. It becomes choppy, hesitant, and unpredictable. Something just feels off. Clean trends become messy when dying. Big moves become tiny moves. Strong closes become weak doji patterns. Candles start overlapping. If the trend still feels smooth and right, score 1 point. If something feels different and wrong, score 0. That's exhaustion checked. Climax candle, divergence, character change. 3 final checks, 3 potential points. Now let's bring it all together into the complete system. You have 9 total checks, 3 for structure, 3 for momentum, 3 for exhaustion. Each check is a simple yes or no question. Yes equals 1 point. No equals 0. Here's your scoring guide. 7 to 9 points means strong trend. You take the trade. 4 to 6 points means weak trend. Wait for a better setup. 0 to 3 points means dying trend. Stay away completely. Let me show you how this price action strategy works in real time. Here's an uptrend. Structure checks first. Is it a clean staircase? Yes, 1 point. Are pullbacks shallow and respecting the danger line? Yes, 2 points. Is the pattern still intact with no break? Correct, 3 points. So structure looks solid. Now momentum checks. Are the candle bodies big and strong? No, and they're actually shrinking. Still 3 points. Is the rhythm steady? No, it's slowing down. Still 3 points. Is volume supporting the trend? No, it's declining. Still 3 points. Momentum is weak. Now exhaustion checks. Is there a climax candle? Not yet, so 4 points. Is there divergence? Yes, it's diverging badly. Still 4 points. Has the character changed? Yes, it feels choppy and uncertain. So no points here. Total score is 4 out of 9. This trend is getting weaker. I'm not touching it. The structure might look okay on the surface, but momentum and exhaustion are flashing red. This is exactly the kind of trend that traps you right before it collapses. Now look at this downtrend. Structure is perfect. Clean staircase going down. Rallies stay below the danger line. No break in the pattern. So 3 points for the structure check. Momentum is firing. Big red candle bodies. Steady rhythm. Volume increasing. We have 6 points. Now the exhaustion test. I see no climax yet. However, we do have a divergence. But the character still feels smooth. So except for the divergence test, it scores 8 out of 9. This is what you wait for. You now own a simple price action trend analysis strategy, a complete system to measure structure, momentum, and exhaustion in any trend on any time frame. 7 points or more, you take the trade. Less than 7, you wait. The beauty of this system is it takes 60 seconds and removes all emotion and guesswork. The trend either scores well or it doesn't. You are no longer guessing because this is a full price action strategy for spotting real strength. And if you're ready to fit this into a full A to Z trading system, that's what our academy is for. Link is in the description.